Hey everyone, let's face it, who couldn't use a little extra cash? I mean, especially when you're a teenager and maybe you've got a part-time job or you're saving up for something big, like a
Yeah.
car or a trip or something. It's like every dollar counts, right?
Absolutely.
And it seems like everywhere you look these days, someone's promising to make you rich quick, especially through
Mm.
stock trading. You see those ads all the time, those videos promising to teach you the secrets.
Oh, yeah, all those, like, make thousands of dollars a day from your phone type of thing.
Exactly, but is it really that easy?
Right. Especially when you're just starting out, maybe you don't have a lot of money to invest.
Yeah, exactly. So that's what we're diving deep into today, right?
Mhm.
We're going to try to figure out if trading stocks is a realistic way to make some extra cash, like maybe an extra $500 a month.
Yeah, that's the big question, right? Can you actually do that, especially as a teenager?
Uh,
We've got a couple of sources we're looking at today, a beginner's guide on stock trading, and then this YouTube video that claims to teach you how to make like $500 or more per month from trading stocks.
Right. So we're going to break it all down, see what makes sense, what doesn't make sense, and ultimately, help you figure out if stock trading is even a good fit for you and your goals.
Exactly.
Okay, cool. So let's jump right in. The beginner's guide starts off with all these terms, right? Like stock exchange, brokerage account. It's a lot to take in.
Yeah, I can see how it could be overwhelming.
Yeah.
But you got to think of it kind of like learning a new game, like before you can start playing, you got to understand the rules, right?
Yeah.
So like a stock, that's basically just a piece of ownership in a company.
Right. So when you buy a stock, you're basically like betting that the company's going to do well and its value is going to go up.
Exactly. And if that happens, you get to share in that success.
So like if I buy stock in, I don't know, let's say a video game company that I really love, and then they release a super popular new game and everyone's buying it, then the value of my stock would go up.
Yeah, exactly. Because now you're like a part owner of that success, right?
Okay, that makes sense.
And those stocks, they're bought and sold on these things called stock exchanges. And the biggest ones, the ones you've probably heard of, are like the NYSE and the NASDAQ.
I've definitely heard of those, but they sound kind of intimidating.
Nah, not really. Think of the NYSE, it's like the OG.
Yeah.
It's the original stock market. It's been around for centuries.
Wow.
Yeah, and it's actually got this physical trading floor where like people used to shout and make all these hand signals to buy and sell
I've
stocks.
seen that in movies. It's crazy.
It is pretty wild. But a lot of the trading is actually done electronically now, too.
Oh, okay. So what about NASDAQ? What's that all about?
Yeah, so NASDAQ, you can think of it like the NYSE's like cool, tech-savvy younger sibling.
Hmm.
Yeah, it's completely online and it focuses mostly on technology companies.
Oh, okay.
So like all the latest gadgets and apps and stuff, chances are the companies behind them are listed on NASDAQ.
Got it. So how do we actually get into these markets? Like, how do we actually buy these stocks?
Yeah, so for that you need a brokerage account.
Okay.
Think of it kind of like a bank account, but specifically for buying and selling stocks.
Makes sense.
And the guide mentions a bunch of popular ones: Robinhood, TD Ameritrade, E-Trade, Fidelity.
Yeah, I've heard some of those.
Picking one, though, it's kind of a tough choice, right?
It is. It's almost like trying to pick your favorite streaming service.
Exactly. So many options.
Yeah.
But here's what I always tell people. Like, the first thing you got to look at is fees.
Yeah.
Some brokers, they charge you a commission for every trade you make, but others are, like, completely commission-free.
Oh, wow.
Yeah, and when you're just starting out, especially as a teen, those commission-free options are super appealing.
Yeah, for sure. Every dollar counts, right?
Exactly. Second thing to check is how user-friendly is the platform.
Right.
Some of them, they've got these really slick apps, easy to understand tools, which is great for beginners, right?
Yeah, definitely.
But some others, they can be more complex and might take a little more time to learn.
So it's like choosing between a video game that's super simple to play versus one that's got all these complicated button combos and
Yeah,
stuff.
exactly. And the last thing I'd say is to check what kind of resources they offer.
Okay.
Some brokers, they've got like amazing educational materials, tutorials, even virtual trading simulators where you can practice without risking any real money.
Oh, that's cool.
Yeah, it's a great way to kind of get your feet wet before jumping in the deep end.
Right. All right. So let's say we've picked our broker, we've funded our account. Now comes the big question. How do we decide which stocks to actually buy?
Ah, the million-dollar question. The guide talks about two main approaches: fundamental analysis and technical analysis.
Okay, fundamental analysis, I'm guessing that has something to do with like The fundamentals of a company.
You got it. It's basically like being a detective for businesses.
Okay.
You're like digging deep into a company's financials,
Yeah.
their earnings, their revenue, debt, all that good stuff.
Oh, wow.
Yeah, and you're trying to figure out, is this a healthy company? Is it well managed? Does it have the potential to grow in value?
So, like, if you were thinking about buying, I don't know, like a vintage clothing store or something, you wouldn't just hand over your money without checking things out first.
Exactly.
Yeah.
You want to know how much they're selling, what their profit margins are, if they have loyal customers, if they're in a good location. Same with stocks. You got to understand the underlying business.
Okay, that makes sense.
It's key.
Yeah. What about technical analysis, though? That one sounds, I don't know, more technical.
It does, yeah. Think of it this way. Technical analysts, they're like trend spotters.
Okay.
They study these charts of past stock price movements and trading volume, and they're looking for patterns that might hint at where the price is headed next.
Interesting.
Yeah, so it's less about the company itself and more about, like, predicting how other traders are going to behave.
Okay. So they believe that history often repeats itself in the market.
Exactly. And by studying those patterns, they think they can kind of get a sense of where a stock might be going.
Okay. I can see the appeal of both approaches. So let's say we've analyzed some stocks using one or both of these methods. What are the different ways to actually trade them? Like, what are the actual actions we take?
Yeah, that's where trading strategies come in. And our sources, they mention a few, but the YouTube video specifically focuses on 4: day trading, swing trading, dividend investing, and long-term investing.
Okay, I've heard of day trading.
Yeah.
It sounds kind of like the stock market equivalent of an action movie, you know?
That's a great analogy.
Yeah.
Yeah, day traders, they're all about the short game.
Yeah.
They're trying to profit from these tiny price fluctuations that happen throughout the day.
Oh, wow.
Yeah, it requires a lot of focus. You got to be able to make decisions really fast and have a really deep understanding of technical analysis.
Yeah, it's definitely not for the faint of heart.
No, definitely not.
Okay, so what about swing trading? Is that a little more, like, relaxed?
It is, a little bit. Swing traders are more like surfers riding the waves of the market.
Okay.
They're looking for these swings in stock prices that happen over a few days or weeks.
Okay.
They might use a combination of fundamental and technical analysis to find stocks that they think are about to make a move.
Got it. So it's still active trading, but with a slightly longer time frame.
Exactly.
Okay. And now dividend investing, that one sounds more like a slow and steady approach, right?
Yeah, it is. So some companies, they pay out a portion of their profits to shareholders on a regular basis, usually every quarter.
Okay.
And dividend investing is all about building a portfolio of these companies and generating what's called passive income.
Passive income, sign me up. So you're basically getting paid just for owning the stock.
Exactly. And the best part is, while you're collecting those dividends, the value of your stock might also be growing over time.
Oh, so that's like a win-win situation.
That's-
Okay. And then there's long-term investing, which I guess is the most long-term out of all of them.
It is, yeah.
Yeah.
It's like the classic buy and hold strategy.
Okay.
You're picking companies that you believe in for the long haul, and you're riding out all the market's ups and downs.
Got it.
It's often considered the least risky approach, especially for beginners, because you're not trying to time the market perfectly or anything like that.
Okay, that makes sense. So we've got like all these different ways to play the game.
Yeah.
But let's get back to that $500 a month goal, right? Because the YouTube video seems pretty confident that it's possible, suggesting a starting investment of $10,000 and aiming for a 5% annual return from dividend stocks.
Right. But that's where we need to look closely at the numbers.
Yeah.
Because a 5% annual return on $10,000, that would only give you $500 per year, not per month.
Oh, right. That's a big difference.
Huge difference. So to actually make $500 per month consistently, you'd need a way bigger initial investment, or you'd need to achieve much higher returns, which, of course, that comes with more risk.
So it's not as easy as the video makes it sound.
No, not at all.
Okay, reality check delivered. But even if we can't bank on those exact numbers, there are still ways to manage the risks involved in trading, right? Because the video mentions diversification, stop-loss orders, and position sizing as key risk management strategies.
Those are super important.
Yeah, let's break those down.
Definitely, especially when you're starting out and maybe don't have a ton of money to play with.
Right. Okay, so let's start with diversification. That one sounds familiar. Isn't that
Yeah.
like the whole don't put all your eggs in one basket thing?
Exactly, you got it. It's all about spreading your investment across different companies, different industries, and even different asset classes.
Okay.
So think about it this way. If you invest all your money in just one stock, and then that company just like goes belly up,
Uh-oh.
yeah, you lose everything, right? But if you've spread your investments around, then even if one company does poorly, the others might do well and help balance things out.
Okay, that makes sense. So it's kind of like having a backup plan, just in case.
Exactly.
Okay, cool. What about stop-loss orders? Those sound kind of intense.
They do sound kind of scary, but they're actually not that bad.
Okay.
Basically, a stop-loss order is an instruction that you give to your broker to automatically sell a stock if it drops below a certain price.
Oh, interesting.
Yeah, so it's like setting a safety net to make sure that you don't lose more money than you're comfortable with.
Got it. So it helps limit your potential losses, which is especially important, I guess, when you're starting out and maybe don't have, a ton of money to cushion those big drops.
Exactly.
Okay.
Yeah.
And then position sizing. What's that all about?
Yeah, so position sizing is all about deciding how much of your capital you're willing to risk on any single trade.
Okay.
It's kind of like deciding how much you're willing to bet on a hand of cards, right? You wouldn't bet your entire savings on one hand.
Definitely not. That would be way too risky.
Yeah, exactly. So with position sizing, you're basically setting limits on how much you're willing to put into any one investment.
Okay, got it.
It helps you stay disciplined, and it helps you avoid making impulsive decisions that could wipe out your account.
Right. That makes sense. So risk management is just as important as picking the right stocks, it sounds like.
Absolutely. It's all about protecting your capital and making sure that you can stay in the game for the long haul.
Okay, that makes sense. The YouTube video also talks about using options as a way to potentially boost your returns.
Yeah,
What are those all about? They sound a little more advanced.
they are. Yeah. Options are definitely more complex and they come with higher risks.
Okay.
Think of them as like side bets on whether a stock will go up or down.
Side bets. Okay, I'm intrigued, but also a little nervous.
I get it. So imagine you think a company's stock is going to skyrocket after they release a new product. Instead of just buying the stock, you could buy an option contract that gives you the right to buy that stock at a certain price by a certain date.
So it's like reserving a seat on a spaceship to the moon.
Exactly.
You're not obligated to go, but you have the option if you want to.
Exactly. If the stock price takes off and goes above that reserve price, you can exercise your option and buy the stock at that lower price and then sell it at the higher market price for a profit.
Okay, I see how that could be really profitable. But what if the stock doesn't go up? What if it goes down?
Yeah, that's the risk with options.
Okay.
If the stock doesn't move the way you predicted, or if it goes down, your option could expire worthless and you just lose the money you paid for it.
So options are like a high-stakes gamble.
Yeah, they can amplify your gains, but they can also amplify your losses.
Okay.
So that's why they're generally not recommended for beginners.
Yeah.
Stick to the basics first, and then maybe later on when you have more experience, you can explore options a little more.
Okay, noted. Options maybe not for my first rodeo in the stock market?
Probably a wise choice.
Yeah.
Now let's shift gears for a second and talk about something that's super important for all traders, no matter how much experience you have, and that's staying informed about market trends and news.
Yeah, because the guide emphasizes that a lot, the importance of being in the know. But it can be hard to tell where to find reliable information, especially with so much stuff online.
Oh, yeah. Social media especially, it can be like a breeding ground for misinformation and hype, especially when it comes to stocks.
totally.
You might see people promoting certain stocks or making these bold predictions, but they might have their own reasons for doing that, They might have ulterior motives.
Yeah, they may be trying to pump up the price of a stock that they own or something.
Exactly. So you got to be careful.
So how do we separate, the good info from the bad?
You got to look for reputable sources like financial news websites,
Okay.
like Bloomberg, Reuters, the Wall Street Journal. Those are good starting points.
Okay.
They provide in-depth coverage of market events, economic trends, company news.
What about those stock-specific news feeds that you see in, trading apps and stuff?
Yeah, those can be helpful for getting quick updates on the companies that you're following.
Oh.
But they often just provide headlines and brief summaries. So it's always good to dig a little deeper and read the full articles or reports just to make sure you have the whole story.
So it's like checking the weather app to see if it's sunny, but then also looking out the window to make sure it's not actually pouring rain.
Exactly. You want to gather information from multiple sources and then form your own conclusions based on, solid evidence.
Okay, information overload avoided.
Yeah.
Now let's talk about something that can really make or break your success in the stock market.
Yeah.
And that's your emotions, right?
Yeah.
Because the guide mentions the importance of staying disciplined and not letting fear or greed drive your decisions, which I imagine can be really hard, especially in the heat of the moment.
It's definitely one of the biggest challenges for traders, Like when the market's going up and everyone seems to be making money, it's really easy to get caught up in all the excitement
Yeah.
and make these impulsive decisions just chasing those quick profits.
Yeah, it's like that whole FOMO thing, the fear of missing out.
Exactly. But with your money.
Yeah, exactly. And then on the other hand, when the market is going down and your investments are losing value, fear can take over.
Right. Totally. And that can lead to panic selling.
Right.
But it's important to remember that the stock market, it's cyclical.
Okay.
There will always be ups and downs.
Right.
So, just try to stay calm,
Yeah, easier said than done, but
Yeah.
yeah, for sure. So how do you stay calm and collected when, like, your hard-earned cash is on the line?
Yeah, that's a tough one.
Yeah.
I think one of the most important things is having a solid trading plan
Okay.
and sticking to it.
Right.
So, before you even place your first trade, decide what are your goals, how much risk are you comfortable with, and what strategies are you going to use.
So it's like having a roadmap for your investments, right?
Exactly. It helps you stay focused, you know where you're going, and you're less likely to get sidetracked by every little bump in the road.
Okay, makes sense. And another key to managing your emotions is probably, like, never investing more than you can afford to lose, right?
Oh, yeah, absolutely.
So that way, even if things don't go as planned, you won't be, like, totally devastated financially.
Right. It's about managing expectations and protecting yourself from unnecessary risk.
Definitely. That's really important, especially for teens who might be starting with, a smaller amount of money.
Absolutely.
But, let's be real, sometimes things do go wrong, even with the best laid plans, right?
Hmm.
The guide talks about learning from your mistakes, but how do you actually do that without getting discouraged?
Yeah, well, every mistake is a learning opportunity, right?
Yeah.
So keep a trading journal
Okay.
where you track all your trades, the wins and the losses.
Okay.
Analyze what went well, what could have been done differently, and what lessons you can take away for next time.
So it's like reviewing game footage after, like, a sports match.
Exactly. You can see where you made mistakes, but you can also identify, your strengths and where you can improve.
Okay, that makes sense.
And don't be afraid to, reach out to more experienced traders, Ask for advice. There's a ton of knowledge and support available online, like in forums and communities and stuff.
Yeah, I like the idea of, like, having a mentor or someone to bounce ideas off of.
Totally. It's like having a coach in your corner, helping you develop your skills and navigate all the challenges.
Okay, that's cool. And, I mean, the stock market's always evolving, right?
Oh, yeah.
So continuous learning is key.
Absolutely.
All right, continuous learning it is. But before we dive too deep into all that advanced stuff,
Yeah.
let's bring it back to the basics for a moment, right? Like, what are some must-know tips for teens who are just starting out in the stock market?
Yeah, good idea. Okay, so for all the beginners out there, here are a few key takeaways. First, remember that investing in the stock market always involves risk. There's always the potential for loss, especially in the short term.
Okay,
So never invest more than you can afford to lose.
sound advice.
Second, start by investing in what you know.
Okay,
Like if you're passionate about a particular industry or a company, do your research and consider investing in it.
okay.
It makes the learning process way more engaging. And you might already have some insights that other people don't.
Right, yeah, it's like, if you're really into video games, for example, you might already be following all the news and trends in that industry, so you have a bit of a head start.
Exactly. And third, don't be afraid to start small.
Okay.
You don't need a ton of money to get started.
All right.
A lot of brokers allow you to buy fractional shares now, so you can invest in companies even if you can't afford a full share.
Oh, that's cool.
Yeah, it's a good way to dip your toes in the pool before you jump in the deep end.
Right, exactly.
And finally, be patient.
Okay,
Investing is a marathon, not a sprint.
right.
Don't expect to get rich overnight.
Patience, young grasshopper.
The stock market rewards those who are in it for the long haul.
Okay, that makes sense.
Now, I think in part 3, we should delve into some of the psychological aspects of trading.
Yeah, I'm definitely ready to explore that. We'll be right back after the break.
Sounds good.
Okay, so we're back, and we were talking about options, and I think we agree that they're a little too spicy for right now.
Yeah, definitely not for beginners.
Yeah, stick to the basics.
Exactly.
Okay, cool. So we were also talking about staying informed about market trends and news, and you were saying how it's so important to find those reliable sources, especially online.
Yeah, because there's just so much information out there. It can be overwhelming, right?
It is, yeah. It's like,
Yeah.
where do you even start?
Right. And a lot of it, especially on social media, isn't even accurate.
Yeah, it's like everyone's got an opinion or they're trying to sell you something.
Exactly. And it's easy to get caught up in the hype, especially when you see other people making money, right?
Yeah, totally. So besides those financial news websites you mentioned, like Bloomberg and Reuters,
Mm.
are there any other resources you'd recommend?
Yeah, definitely. I mean, you can check out company websites directly, read their financial reports, listen to their earnings calls.
Oh,
That can give you some really valuable insights into how a company is actually performing.
okay. Yeah, makes sense.
And you can also look for independent research reports from like investment firms or analysts.
Okay.
Just make sure that they're reputable sources.
Right. Always double check. Okay, cool. So you've got your sources, you're staying informed, but then there's the whole mental game of trading, right?
Oh, yeah, that's huge.
Yeah, the guide talks about the importance of like staying disciplined and not letting your emotions get the best of you, which I imagine is really hard, especially when you see your investments going up and down.
It is, yeah. Like one minute you might feel super confident, and then the next minute you're second guessing everything.
Yeah, totally. So how do you like stay level-headed when the market's going crazy?
It's tough, but I think the key is to focus on the long term. Don't get too caught up in the day-to-day fluctuations.
Okay.
Remember why you invested in the first place
Okay.
and stick to your plan.
Right. Easier said than done, I guess, but
Yeah.
yeah.
Yeah, definitely. But it's important to try.
Yeah. The guide also mentions this thing called paper trading. What's that all about?
Oh, yeah, paper trading is awesome.
Okay.
It's basically like a stock market simulator.
Okay.
You can practice trading without risking any real money.
Oh, that's cool.
Yeah, you can test out different strategies, see how you would react in different market conditions.
Okay.
It's a really great way to like build confidence and get some experience before you start trading with real money.
That makes sense. So it's kind of like, in video games, when you have that practice mode where you can try out all the moves and combos without worrying about losing.
Exactly. It's the same idea.
Okay, cool. And what about like setting realistic expectations? Because I feel like a lot of those ads and videos online make it seem like you can become a millionaire overnight.
Oh, yeah, they definitely paint a very unrealistic picture.
Yeah.
But the reality is, most people don't get rich quick from trading stocks. It
Good.
takes time, it takes patience, and it takes a lot of learning.
Right. So what's a more like realistic expectation for someone just starting out?
Yeah, well, you should always focus on learning and improving your skills, right?
Yeah.
And then over time, you can start to set some financial goals,
Yeah.
but don't expect to like double your money overnight or anything like that.
Okay, so patience is key.
Absolutely.
Got it. The guide also touches on the importance of finding a trading style that works for you.
Oh, yeah, that's super important.
Yeah, because we talked about all those different strategies like day trading, swing trading, long-term investing, and it seems like there's no one right way to do it.
Exactly. It really depends on your personality, your
Huh.
risk tolerance, how much time you have to dedicate to trading.
Like if you're someone who thrives on excitement and you're not afraid of taking risks, then maybe day trading is a good fit.
Okay.
But if you're more patient and you prefer a hands-off approach, then maybe long-term investing is better.
Okay, that makes sense. And are there like resources out there that can help people figure out their trading style?
Oh, yeah, tons. There are like quizzes and questionnaires you can take online, books you can read. You can even talk to a financial advisor.
Okay, cool. So it sounds like the key takeaway here is that there's no one-size-fits-all approach to trading, right?
Exactly. You got to find what works best for you.
Got it. Now, the guide doesn't really mention much about taxes, which I feel like is an important thing to consider when you're talking about making money.
Yeah, for sure. Taxes can definitely eat into your profits,
Yeah.
so it's important to be aware of the rules.
Okay.
And it can get kind of complicated, especially with different types of investments.
Yeah, I can imagine. So I definitely recommend talking to a tax professional or doing some research online to make sure you understand how taxes will affect your trading.
Okay, so don't forget about Uncle Sam. He always wants his cut.
Exactly. Always got to pay your dues.
All right, so we've covered a lot of ground here, from picking a broker to managing your emotions to understanding taxes.
Yeah, we've hit a lot of the key points.
Yeah, we have. But before we wrap up, is there anything else that's super important for teams to know about stock trading?
Yeah, I think one of the most important things is just to remember that you're never too young to start learning about investing.
Yeah, for sure.
The earlier you start, the more time your money has to grow.
Okay.
And don't be intimidated by all the jargon and the technical stuff.
Yeah.
There are tons of resources out there to help you learn.
Right. Books, websites, YouTube videos, podcasts like this one.
Exactly. Just take it one step at a time, and you'll be surprised how quickly you can pick it up.
Awesome. Well, I think that's a great note to end on.
Yeah, I think so too.
Thanks for sharing all your insights with us today.
My pleasure.
And for all of you listening out there, we hope this deep dive has given you a better understanding of what stock trading is all about and whether it's something you might want to explore further.
Definitely.
And remember, like we said, do your research, find those reliable sources, and most importantly, don't be afraid to ask questions.
Absolutely.
All right, that's it for today's deep dive. We'll catch you next time.
See you, yes.
Okay, so we're back for the final part of our stock trading deep dive. We've talked about all the basics, right? Like what stocks are, how to choose a broker, the different trading strategies, all that good stuff.
Yeah, we've covered a lot of ground.
We have. But there's one more crucial aspect of trading that we need to discuss, and that's the psychology of it all.
Right, because it's not just about numbers and charts.
Right. It's also about understanding how our own minds can, play tricks on us when it comes to money.
Exactly. Our emotions can really influence our decisions, especially in a fast-paced environment like the stock market.
So what are some of those, mental traps that we need to watch out for?
Well, one of the biggest ones is something called confirmation bias.
Okay.
And it's basically the tendency to seek out information that confirms our existing beliefs, even if those beliefs are wrong.
Oh, I think we've all been there, right? Like, you find one article or one YouTube video that supports your stock pick, and suddenly you're convinced it's a guaranteed winner.
Yeah, it's a natural human tendency, but it can be really dangerous in trading.
Right.
Because you might ignore warning signs or red flags just because you're so focused on finding evidence that supports your initial hunch.
So how do you avoid falling into that trap?
Well, you got to be willing to challenge your own assumptions.
Okay.
Like actively seek out information that contradicts your viewpoint
Okay.
and consider the opposite perspective.
Right. So it's not about being right or wrong. It's about making the most informed decision possible.
Exactly.
Okay. I'll try to keep an open mind. What other mental gremlins should we be aware of?
Another common one is loss aversion. It's basically this tendency to feel the pain of a loss more strongly than the pleasure of an equivalent gain.
Oh, I've definitely experienced that.
Right.
Like that one losing trade just stings way more than a winning trade feels good.
Exactly. And that can lead to holding on to losing positions for too long, hoping they'll bounce back, even when all the signs are telling you to cut your losses and move on.
So it's like clinging to that pair of jeans you haven't fit into for years, hoping they'll magically sit again someday.
Exactly. So you got to have a plan for when to exit a trade, both for winners and losers.
Okay.
Stick to your strategy, and don't let emotions cloud your judgment.
Right. I'm starting to see how mastering your mindset is just as important as mastering the technical aspects of trading.
Totally. Your emotions influence your decisions, and those decisions can then impact your results.
Okay, so after all this, what's the final verdict? Can someone, especially a teenager just starting out, really make $500 a month trading stocks?
Well, here's the bottom line. It is possible to make money trading stocks, but it's not easy. And it's definitely not a guaranteed path to riches, no matter what those flashy ads might tell you.
Right. No shortcuts or magic formulas here.
Exactly. It takes time, it takes effort, a willingness to learn, and the discipline to manage your emotions.
It's important to remember that everyone's journey is different, right? What works for one person might not work for another.
Absolutely. So it's kind of like figuring out what study habits work best for you, right? Some people thrive studying groups, others prefer to go solo. It's about finding what suits you best.
Right. Exactly.
The key is to define your financial goals, understand your risk tolerance, and choose a trading approach that aligns with your personality and lifestyle.
Okay, that makes sense. This whole deep dive has definitely given me a lot to think about. Stock trading can be a really powerful tool for building wealth, but it's definitely not something to jump into lightly.
And that's a really important point. Do your research, stay informed, be patient, and never stop learning. The stock market is complex, and it's constantly changing, but with the right approach, it can be a really rewarding journey.
Well said. So if you're thinking about exploring the world of stock trading, take what you've learned from this deep dive, do your own research, and most importantly, make decisions that are right for you.
Couldn't have said it better myself.
Awesome. Well, thanks for joining us on this stock trading deep dive. We hope you found it helpful, and we'll catch you next time.
See ya!